Hello. Hope you guys are having a good day. Today is the 11th of February. I'm going to be doing a market review. I'm telling about my insights about the week, going over about what's important. These are ICT's concepts, and let's get into it. So Monday we opened and made this big new week opening gap right here. We dropped and we hit this area right here where there was a lot of confluence. Over here too. Confluences on the daily. For example, see this right here. This on the weekly is the midpoint of this wick right here. On the monthly, this is the wick of the middle. On the weekly right here too. So on the monthly we have this wick right here. Now this is on the weekly. Right here we have that monthly. So we go down and we touch it, the midpoint right here. So backwards to Monday. We drop, we hit those midpoints of the weekly and the monthly. We're at a deep discount for the NASDAQ, right? We're at 20,000. Our draw is going to be the direction of the new week opening gap. We're definitely probably not going to fill it today on Monday because we do on this week. Let me check for you. On Forex Factory, we had, what was it? NFP on Friday. And we could have traded to the direction of that big boy over there. The NWAG. That's what I mean by big boy. Because that is pretty big. You mark out the 4 quarters of that NWAG because they all have reference. We drop 930 right here as 930, right? And something very interesting. Let's talk about this price action right here, right? So 7 a.m. is right here. We make this fair value gap and we don't go back into it right here, right? So when we're going up like this is very good sign right here because we also reacted right here, displaced on the midpoint of that monthly. Right here at 8 a.m. you saw there was a clear manipulation and then a big distribution. We don't want to see price come down here, and if we do, we're taking this low, most likely this low if we take this low. But what we're focusing on right now is these equal highs and the direction of the NWAG, right? Because all London session and Asia session we've been dropping. Right here is our breaker block. Breaker block right here. ICT said you want to align these breaker blocks with the fair value gap. And those are the best. Have the high probability. I'm gonna show you right here. This is what he means. This guy right here aligned with the breaker block that did the manipulation at 8 a.m. Because it's at 8 a.m., this is a very nice order block and it's a nice displacement. Sorry about this. TradingView is shit for this. Doesn't leave me where I was. It's alright. We touch it, we go up, right? And immediately, within the first 3 minutes of the market, we take sell side right here. Oh, we don't. Even better. So we don't take it. We come down and we use this for value gap right here. Respecting the midpoint, we touch the midpoint and we're closing above it. Very good. And we take the highs. Now, what we want to do is stay above this order block. We want to stay above. Why? Because that order block is aligned with the liquidity as well. Not this day. Don't want to see it go past that. If we did, that's cool. What I'm keeping in mind is that, right, this in mind. What I'm keeping in mind is that last PM session was up here and we opened down here. So we have a big gap on regular trading hours right here. I can show you. Where is it? Right here. From here to here we have a big gap. So we gotta get to filling. I noticed that immediately. So I'm thinking, okay, if we do take this 9 a.m. low, I wouldn't want to see it go any further if I want to be holding for long term. Keep losing the price. Alright, here we are. So the PM session we take the AM lows. This guy still matters because of this breaker block at 8 a.m. Still matters, right? Take these highs. And we want to be targeting for a low hanging fruit right here, London session. We take London highs. Specifically London highs, right? This also matters. The 1 a.m. highs. See a 1 a.m. right here on the time. These also matter. And we don't take it, right? Because we also have this victim and this to fill with this to fill, the regular trading hours. So Monday, we go up. We take London highs. And then we consolidate for the rest of the day until 4 p.m. That's Monday. This is what matters. Because it's at the time. Time is first. Touch this order block. Another thing is we're respecting this volume imbalance on the 5 minute. Very, very good. Okay. Here as well. The bodies. Touch it, we go up. right? So that's Monday. Asia session, London. So here we are. The next morning session. Starting off at 7 a.m. right here. Very good right here. Very, very good. The reason I marked out this 7 a.m. fair value gap is because when we have one of these, they tend to be a really good PD array for that market structure in the morning session. Let me give you a good example. 7 a.m. fair value gap. This doesn't happen every day, but when it does, it's just so obvious. So I marked this out. I think on the 1 minute. So here we are. Is this the day? No, this is another Monday. This Monday. Here we are. 7 a.m. fair value gap. We made it, right? Another thing. Another thing ICT says is that the fair value gaps that are made before taking liquidity and that are made at a good time are important. So this fair value gap, look, we have this low right here, and this fair value gap was made before taking this low. The same way this one was made before taking this low, they all matter. So here we have it dragged out. Respecting the midpoint, really good, because this is the fair value gap that we made at 650, specifically 650, into going into 7 a.m. to take these lows. So this fair value gap and this fair value gap are going to be our legs for the shorts. We're going up. This is really good because we left these lows like this. These lows, one lower than the other, like this. It's really good for shorts. It's better. ICT says this is better than this. Like these equal highs right here. This is better. Another thing I really like to see about this price action is that 8 a.m. we are going the opposite direction of our bias. So for 8:30, we're over here and we touch this premium fair value gap. We even have this balance price. Right here. This is balance price. When the bodies do this, they both overlap. Alright. So 8:30 we drop. And like I said over here, this fair value gap, right here, let me make this blue, was made before taking liquidity. The same thing as this 8:30 fair value gap. 8:31. We make this fair value gap. We don't reach the midpoint, and it's the one that's made before taking liquidity right here. We use it, we go down. Alright. We also touch the midpoint of the 7 a.m. lows, or the 7 a.m. It's a fair value gap. The midpoint, we touch it before going down. We just barely touched it, and we go down. Now I'm looking for shorts. So I wait for the macro at 850, right here. And I see that what we do for 9 a.m. is take highs right here. And we're kind of setting up these right here, these equal highs for 9 a.m. So these would not be a good stop right here. Right here, not so much either, because I bet on the 3 minute this is left open. But it is supported by this 7 a.m. Fair Value Gap. So I guess you could say this midpoint right here, you could trust it. The midpoint right here would have your stop right above, because I just want to see it tap it and maybe go up a little bit right here and then drop. 9:30 we open. Take these shorts, but these short-term buy stops, and then we drop into our initial target that equals these two. Right, so boom, we're grabbing liquidity, and we're in a deep discount. Right, we have all this price stopping us. And this is really good. Let me tell you why it's really good. That's alright. I thought it was something else, but PM session is over here. That's what I was looking at. The PM session closed here, and we open over here. There's a gap from here to there. We fill the gap immediately. And then at 9:50, the macro, we start to zoom up, taking these highs, and we take the high of this fair value gap. I also noticed that we had the same equal highs we had here lined up with 9:30 highs. 9:50 opens. We trade this into this fair value gap. We don't touch the midpoint, and we're going up. This is really, really good, because now I want to see us inverse this. Boom, boom. I don't want to see us come under here. Hell no. Stop loss right here. At the bottom of this rally gap to right here. Because if we come and take this fair value gap lows right here and this inverse lows, also paired with the liquidity we just took during the macro, that macro is most likely low probability, and I just don't want to see myself in that trade where it's going to be choppy and it's not optimal for the delivery. So we come and take these highs, and we take 8:30 highs, right? After we do so, look what we do with the 7 a.m. fair value gap. Let me align it with these volume imbalances to make it even better. Right, so here we are, respecting it very nicely. This is what I mean by it could be a good PD array for the morning session. We reach these highs before 10 a.m. Oh, during 10 a.m. So we get here at 10 a.m. and we come and we use this as a breaker. Why is it a breaker? Because this is the order block we used to take these highs. Now, this is an order block we created, and it's also a really good order block, a breaker block, because it's aligned with time. The same way the last PD array was aligned with time, the 8 a.m. order block, this also has a lot of weight in the market. It carries weight. Same thing as this 7 a.m. fair value gap. When you align your PD arrays with time, they tend to deliver almost perfectly. Well, perfectly, literally. So we don't reach the midpoint right here. We take these highs, London highs. Or am I crazy? Yeah, we take London highs right here. Take it, boom. And then we end up going higher. Where to? In the direction of our NWAG in this direction, right? You could be looking for shorts right here, right? Because this 9 a.m. fair value gap was also made before taking this liquidity, right? So you could trust this pretty good. So you could target these Asia lows, right? You could go short there, but our real direction is longs. We're going to be going long for the long term. So let's go to the next morning. We come and take these 1 a.m. highs, the 1 a.m. highs. Those are pre-market for London. And then we go for Asia highs right before consolidating. The liquidity and PD arrays, when you align them with time, that is what is important. And it is actually ridiculous how important it is and useful. Look at that shit. We take that certain liquidity and then we chop around, we reverse. You could respect a reversal around here because you have no more goals other than the next morning session. 1 a.m. we spike up for no reason at all. Unless Forex Factory is hiding some news. I know there's this other place that has better news, but anyways. 7 a.m. right here. We make a fair value gap. Mark it out. And then we go lower. And we take London lows in the 7 a.m. morning session, the pre-market session of morning, right? See these lows? Very equal, trendline looking, smoothness. Low hanging fruit, you could target Asia. Target PM. Another thing that I really like about this price is that this fair value gap is aligned with London liquidity. Let's mark it out. Touch the midpoint. Very convenient. We drop hard after, smooth, happy uptrend. And you know what's really good about this uptrend? The same way that last time the 8 a.m. was going. I'm bearish. When I see this, I'm bearish. I see this, bearish. I want to be short for 9:30. So I see 9 a.m. right here. Look at the time. We're going the opposite direction of our bias. This is so good. So we go up and we touch it. And we don't touch this at 9:30. 9:30 we open. Same way. 7 a.m. has an important because it's the first presented for rally gap. 9:30 is also important. Let's just have this red. So we go and we're dropping. We take these lows. PM lows. I end up taking the lunchtime lows. Oh, I end up going lower. But to where? To where are we going? Here we are. To this for rally gap. Right here. On the 4 hour. Let's mark it out. And the midpoint. Very nice, right? Very nice, very nice. So that same day. Where is it? Did I mark out a whole different thing? On a whole different day. Okay. So here is that 4-hour fair value gap right here that I marked. This is the 4-hour fair value gap low that I marked. So even better when your liquidity is paired with these big higher time frame inefficiencies, even better. So this is our target, boom, low hanging fruit, take profit. See how it just chops around, and then we touch the midpoint, and we scoop lower into the lows of the fair value gap. You mark that out too. That's also important for the lesson. So here we are. High, mid, low. High of the fair value gap, mid, and the low. We take it all right here, right? This is my target, right? Also taking that 930 fair value gap right here. Don't forget about that. It's a very good PD array. Same thing with this. They all matter. So we're having a tough time getting above this. Right here, we create a new day opening gap from the close to the open. And we chop around for the rest of the day after taking this lows. So this is Wednesday. This was Tuesday. This was Monday. Alright, we're going to Thursday right now. So here we are Thursday. What we ended up doing was taking our if we closed right here, 4 p.m., you see the time? 4 p.m. we closed. At this time, I'm not looking at the charts. My goal for tomorrow would be these highs, and then I see London session and Asia session end up taking these highs. Well, that's no problem, because we're trading in the direction of this open end walk, right? So Thursday, where's 7 a.m.? All right, cool. 7 a.m. we have a little mess, which is good. Means the institutions are in play. This Thursday is also morning news, so it's a good time to trade the morning. Here is a good time to trade the morning. Every day was a good time to trade the morning because there was a news factor that's going to help the morning session deliver. When there's no morning news, it's better to trade the PM or just stay away from that morning session because it's not going to be very delivering. Anyways, new day opening gap. And here we have 7 a.m. lows that are aligning with the new day opening gap. It's aligning with it. When you have liquidity that also aligns with these new day opening gaps and new week opening gaps, it's really good, right? So let me mark out important things real quick, and I can explain what they are. Right. So I see we have created these equal lows. I would be targeting these lows for this drop. But then I see that we don't take it. You don't want to be too stubborn on these kind of trades because you also got to take in mind that we're at a good area for a buy. And there's NFP on Friday, which ended up smashing. Ended up smashing these lows. Anyways, this new day opening gap right here. This is a new week opening gap right here. They all matter. From Sunday close to Friday close to Sunday open. Mark this bitch out. Okay. So, what do we have here? So here's our new week opening gap we have. This helps us structure our price. 9:30, we open. And we have two sides with equal highs and equal lows. What am I gonna do? You wait for one of them to be taken. So here, we took this one. And what do? Let's keep in mind that we have to be looking at the where we were in PM session. So right here, this is really good. So PM session closed right here, 4 p.m. And we opened up here. That means there is a gap from here to here, the close to open. So not only is this low aligned with this new day opening gap, but the regular trading hours gap is also aligned with this liquidity right here, with Asia lows, right? It's all here. And it's all gonna be fucking a good real target for today, because this ended up being the real move. London highs right here, after taking this liquidity for 940. We go up, we fill this fair value gap all the way. We even take the low of it, and now we're going up. We take London highs, right? After taking London highs, if we are super, super bullish, I don't want to see us come back, retrace, be gay around this area. I want to see us boom, boom, up immediately. So I see at 950, we're at a deep, deep premium. We drop, come up here, and we fill down here. I bet there's a 5-minute right here that we end up inversing and touching and going down into the real target, the regular trading hours. So let me go on the 5-minute. This is Thursday. Yep, what'd I say? Here we are. By the way, I didn't know there was that actual level of precision. It's just I'm kind of used to seeing that happen. This is all just a raw market review. So here we are. Oh, I was close. So here, we fully closed through it at 10 a.m. Fully. Because on the 5-minute, there's a 5-minute candle every 5 minutes. So here, we fully closed through this bullish for rally gap. We reach up and we touch this midpoint. Before going down. We don't even have time to come up here. We don't have time for that. Because shorts are fast and fucks everybody up. You could enter short right here. If you know these shorts are coming, you could enter short into the fair value gap right here. Into the fair value gap. Ride it to the lows. If I was short, I would target the lows of the new day opening gap. And then we fully take lows at 10:30. And come up, new week opening gap that we marked out. Remember? Come touch, and we touch the midpoint of that 4-hour. And then we chop around for the rest of the day. Right here. Actually, I think, yeah, we end up going to the New Week opening gap. I remember I was long right here, and I got fucking destroyed by this candle, then I re-entered into this guy. But I guess you could see it through. So, another important factor. We ended up chopping around after our goal was reached, right? We took these London highs, goal one for longs, shorts, done. I mean, if this is taken, I mean, you could trade this, but fuck that. I don't wanna be in a choppy market. I like the volatility. You have your own style, but I like that one. We touched that new day opening gap from the close to the open. Look at that precision. Yoink, we go to the new week opening gap. And let's go to the New York AM session. Oh, even better. This was so guaranteed to fill this. So guaranteed. Anyways, what I see is we have London lows right here. And we also have these sharp lows right here. I call them sharp because they look like the mark. It's kind of like sharks. Like, before a market trend happens, the sharks, by sharks I mean like the people that run the market, and they like the institutions. See how it's like smooth and then boom, sharp, fucking boom, liquidity. Like volume kicked in and destroyed shit up, and we take highs. Now we're in this initial range. This right here, let's make it like this. Why am I doing this? Because these two highs and lows have taken liquidity, right? This applies to everything, but let's just stick to this range we're working in for the 9 a.m. session. You could do it for this, whatever. The 9 a.m. session, I want to be focusing on the range we have created since 7 a.m. to where we are now, right? So we have London lows. We created these equal lows. I would like to see us come take these lows and then go up, but you could see that we have other intentions. Right here, 9:30. Fair value gap right here was made before taking these highs. So this fair value gap was the fair value gap made to take these highs. And now, because we use this fair value gap to take these highs, it makes this a breaker block. Right? So we have a breaker block. It's not aligned with time, so it's low probability breaker block. Okay? And we use this fair value gap. Look how we touch it for 9:30, and then we go up. Very cool. And we're also using these lows as support for our longs. And these high right here is another PD array. 7 a.m. we have right here just regular price action. No fair value gap to draw out, so it's okay. Right, don't matter. I don't know what this is. I don't know what this blue block is. Anyways, we have the midpoint of the new week opening gap, the 25%, and the 75, and the full. 9:30 in 2 minutes, we take buy side. In 1 minute, 9:30, so 2 minutes, from 9:30 to 9:31. Since then, we have not, ever since, like I said in that old yesterday with London highs, I wanted to see us take these highs and immediately rush up to fill the rest. We didn't do that. We ended up going down. Now I'm predicting either we're going to accumulate liquidity or we're going to just fuck everybody up going long by priming. Priming is when we go too deep in the trade for no reason. Well, the reason is we're creating liquidity for another time, which ends up happening over here. But we want to make sure we're correct. So the bodies respect the low of that new week opening gap very nicely. And this is also pre 9:30. So this fair value gap right here, we opened, we retouched, and we went up. So we touched this order block before going up. We have a breaker block right here, and right here we have liquidity. So this fair value gap was made before taking liquidity. Okay. It's important because it also aligns with this one. And it's also the midpoint of this range right here, the one that we broke out of. We're in the midpoint of everything, right? We're also at the 75 level on the new week opening gap. So the PD arrays that are aligning with this, we want to see them really stick out for longs. We want to see it support and actually not stutter, right? So 9:50, the macro hours. We close through this. We even take the high of it. It's so beautiful because at 9:50, instead of taking this high, we don't even take this low, but we touch the 75% level. We don't even reach this fair value gap, and then we immediately take highs. Okay, so what is this? It is a fair value gap aligned with the breaker block. The breaker block. The breaker block. Here we are. We deliver. Boom, 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 boom. We fill the gap by 10 a.m. Perfect 9:50 macro delivery. Right here. If you wanted to go along here, you can go along here. Your stop loss would be right here. If you're going long. Why right there? Because honestly, it should be right here. Wait, hear me out. The reason why I would want it under right here is because since we took the highs and we filled this fair value gap, we haven't taken any liquidity. We touch this, go up, use this, go up, use this, go up, use this. I wouldn't be surprised to see us take this low, touch this equilibrium, and then go up. That's why I would have some breathing room and move it up to here to the low of it. And the reason I say this low because there's also a volume imbalance right there. And it's also a really low probability that we're going to keep going if we end up chopping around 950 because it's 950. If we end up going down here 950, the chances of going longer not as high probability, not as golden. So I see us open up, take this equilibrium. Look at the bodies, respecting it with this breaker block for value gap. Boom, boom. Let's pull it. I'm done. You can go like this if you want. You can enter on the midpoint if you want to be precise. Go right here, stop loss right there. Target the highs. This is such a beautiful trade right here because it was also on the, this is another time. This was the real week. I was showing you the wrong week. Friday we had this morning news, Thursday the morning news, and we had FOMC Wednesday. And that was the reason that I was hesitant about Monday and Tuesday, because we had this. So we're probably going to accumulate liquidity, take it, and then we're going to deliver these days on the New York session. So we ended up doing that on Friday, the 25th. Damn, I'm wrong again? Okay. Fuck, sorry. Trump speaks Monday. Blah, blah, blah. Very nice week to trade. Trade Monday. Trade Friday, Thursday, and Monday. That's it. So this was that week. We filled it. Good into the week. Right? 1 p.m. See what we do? We take these lows. I'm really glad we did that. That was Friday. And then we closed right there. And then we gapped to these lows that I was concerned about. Gapped through it. And now we have the same cycle. Filling up the same cycle. But that was my new week, week review from the last week of January. Solid, important price action, explaining why it is important based on time. Time comes first, and then, there comes the price. But here we have it. Hope you enjoyed the video. Maybe you learned something, but that is my market review.